Good evening, ladies and gentlemen. Thank you for joining us tonight. Unfortunately, Mr. Hidayati is running late. He's going to join us a little later. But on behalf of Iran American Society, we welcome you tonight joining us for this interesting topic. This is our ninth monthly meetings that we have. We have a different topic, and this is the last one for 2021. And Dr. Dehnad will speak about Bitcoin and cryptocurrency. Before I start, I'd like to have a disclaimer here that the Iranian American Society of New York and nor the speaker suggest or any form of investment in cryptocurrency, for that matter, any investment in market at all. So this is only for the educational purposes, and it doesn't suggest that you should go and put your savings on it. So that is, I just want to make it very clear, and we are in recorded line, by the way. So with that, I just want to have a very brief introduction. As all of you know, cryptocurrency lasts 72 hours, going through a lot of upside down. So the time is just right. And our speaker is Dr. Kosrow Dehnad, who is on Faculty of Financial Engineering and of the Columbia University and Department of Finance and Risk Engineering of New York University. Dr. Dehnad has been involved with the financial market for the past 40 years. He was Assistant General Manager and Head of Analytical and Quantitative Trading and Co-Head of Hedge Fund Group of Samba Financial Group, previously Saudi American Bank, where he initiated use of big data and data mining to develop trading strategy. Prior to joining Samba, Dr. Dehnad was managing director in the structured credit product at Citigroup, in charge of exotic credit trading. Previously, he was head of the fixed income derivative structure and new product. Dr. Dehnad received his bachelor degree in mathematics with a first class honor from University of Manchester in England, and his PhD in mathematics from University of California, Berkeley. After receiving his second doctorate from Stanford University, Dr. Dehnad joined AT&T Bell Laboratories, where he published a book titled Quality Control of Taguchi Method. He started the career in Wall Street at the program trading firm of D.E. Shaw. Later, he joined the derivative marketing and trading at Chase Manhattan Bank. Dr. Dehnad's latest book on blockchain investor manual was published in 2020. With such a remarkable background, it is my great honor and pleasure to introduce you, Dr. Kosrow Dehnad. Kosrow John, floor is yours.
Thank you, Mr. Mani, and also Atusa, and also Mr. Hidayati, who made it possible for me to give this talk. And I want to thank every and each one of you who has joined this meeting. And I'm not going to talk more than 50 minutes. And at 50 minutes, I stop, no matter where I am. So Mr. Mani, in 45 minutes, let me know so I can just wrap up the important points.
Sure. Thank
because
you.
when I have meetings with people who are in risk management, I say, how can you manage risk that you can manage the amount of talk that you do, which is under your own control? Anyway, the talk is about Bitcoin and cryptocurrency, and I want to describe in a non-technical way how the Bitcoin works and why it also uses a lot of electricity and energy, and it has a lot of carbon footprints. And if some of you might remember that Iran had some blackout, and it was partly blamed on Bitcoin miners who used cheap energy that was allocated to industrial use or religious places, and they started to mine Bitcoin. With this introduction, let me start by, let's see if it works. Yes. See, all of you agree that internet has impacted our lives. Some of it has been transformative. Online shopping, Uber and Lyft. Some of it has been disruptive. For example, look at this yellow cab taxis. The permit for having a yellow cab taxi was almost $1 million a few years ago. Right now, it's south of 250, and I've heard sometimes it's $100,000, right? That's because of the Uber and Lyft. The way we get our newspaper. I really can't remember the last time I read a newspaper, right? And also commissions on your trades, right? Actually, at this time, commissions are almost free, right? So it would be a matter of time that internet would impact the way we think about money and the way we use money, right? Let me start this with an example, right? Suppose there is an Indian software developer in, say, Silicon Valley, and he wants to send some money to his grandfather in a village in India. What should he do? First, he cannot send it during the weekend. He has to wait for a work day. He has to wait till the bank opens. Then he has to fill some forms. That local bank sends it to what they call money center bank, Citibank, Chase. Chase contacts their correspondence bank, say HSBC. They send the money to a major bank in India, and that major bank in India should find a local bank in that village of the grandfather. And if the grandfather doesn't have a bank account, then it's another ball of wax. So compare this with just sending an email. You can send an email 24/7, any time of the day, and you send it directly to somebody. It doesn't have to go to a central station. And Mr. Mani can explain it better. It's a network. This node is not working, it just changes the routing. So the basic idea was that, why shouldn't I be able to send money 24 hours and peer-to-peer, decentralized? Why do you have to go through a bank? Of course, an email is totally different from sending money. So let's take a few minutes and talk about what are the main functions of money in an economy. The first one is medium of exchange. When I want to buy something, I just use money. Otherwise, we should resort to barter. I have wheat, I want meat, then I have to go with somebody who has a meat and who needs the wheat exactly at the same time and the amount that I have. And they say coincidence of wants, all things that we read in Economics 101. The economy will be very slow. So one of the main features of money is medium of exchange. The second one is store of value, right? We all save when we are young and middle-aged, when we have a lot of money, so that we can smooth out our spending. So when we are older and we don't have that much money generating power, we can use our savings. For something to be a store of value, it should not be that volatile. In other words, I cannot save, and when I want to retire, I realize that what I've saved is worth 1/10 of what I put in. Okay. And finally, it's the unit of account. Even for countries who are in barter, for example, Iran sells oil to India and buys and gets wheat or rice. All the recordings in the ledger is in dollars. I sold you oil, and the value of the oil is that. So the function of money is medium of exchange, store of value, unit of account. Now let's look at what's the property of cash. Okay. The first one is anonymity. When I go to Dunkin' Donut or Starbucks, if I'm more sophisticated, and I buy a cup of coffee, the guy doesn't know what my name. The guy doesn't know how old I am. The guy doesn't know where I live. The guy doesn't know my social security number, right? And the same thing applies to him. I don't know what his name is. He might have a tag, but I don't know his family name. I don't know his age. I don't know his bank account. I don't know his address. So this anonymity is very important. If you go through writing a check or your credit card, at least the credit card or the bank knows all those information. The second one is double spending. When I give my money and I get a cup of coffee, I cannot spend that money again, right? By the way, counterfeiting is also a kind of double spending. You spend the money that you don't have. When you have a central bank, they can always reverse the trade, reverse the account. But counterfeiting is being made very difficult. If you look at your notes, put it in front of light, there are so many things inside it that prevents you from counterfeiting it easily. And also, if you counterfeit a note, you are dealing with the apparatus of the state. They can take you and put you in jail. Now, the good thing about centralization is that they can reverse the account. There's a trade, they say it's not good, they reverse it. And second thing is that the government knows is that KYC, know your customer. They know, they want to know where the money is going. Which money is going from where to where. It's not going to Al-Qaeda and all that stuff. Okay? So let's see what are the properties that the cryptocurrency should have. In other words, to be accepted as money. The properties of internet, 24/7, there should be no spam or denial of service that you want to do a trade and you have to wait because there's a spam and it takes you 2 days to close a trade. Okay? It should be peer-to-peer. If I want to send you money, the same like an email. Why should I go to a bank? It should be secure. And a lot of people are very sensitive about anonymity. When I want to send you money, why should the bank know who am I, who you are, and all that information? It should be resistant to counterfeiting, which is easy on internet to duplicate something. And also should prevent double spending. And another factor which is important and appeals to a lot of people that invest in Bitcoin is the debasement of currency. They believe that governments, by printing money, after a while, they bring about inflation and the price of everything will go up and the value of the money that you have saved, right, will go down. So if you have a pension and there is inflation and your pension is fixed, right, similar to what's happening in Iran, you will be in trouble. Now, a lot of attempts have been done and always something was missing. Something was centralized, something wasn't secured, etc. Till in October of 2008, an anonymous person that still people don't know who he is, with the name of Satoshi Nakamoto, issued a white paper. Essentially, it described how a cryptocurrency should work. And in the 3rd of January of that 2009, the first Bitcoin was priced at less than 1/10 of a penny. By the way, Satoshi Nakamoto used to write things, but from since 5 or 6 years ago, he has disappeared. Nobody knows who he is. By the way, 100 million Satoshi is equal to 1 Bitcoin. Essentially, Satoshi is the lowest unit of Bitcoin. So 100 million Satoshi is a Bitcoin. Okay. Now, the question is this: how did he do it? See, let's talk about what is infeasible in cyberspace. I told you that they have made it very difficult for you to counterfeit money physically. But in cyberspace, what is infeasible? See, if I tell you, you know what, there is a problem. We know how to solve it. You have to do some computation. But this computation is going to take 100 years, given the technology that we have. And you want to tell me, Kosrow, for all practical purposes, this problem is infeasible. We don't have time to wait for 100 years, right? At this time, you have to fasten your seatbelts. We become a little bit technical, right? Let's apply this feasibility to everyday life. See, suppose you're sitting in front of your computer and there's a program You input a number, it spits out a number. You put 5, it adds 7 to it, and it gives you 12. You input 10, it gives you 17, right? Now, suppose I ask you this question. Can you input something that the output has 2 zeros at the end? Okay. Now, if you know what is inside that program, like this one that we know, buzzword is that if there's an algorithm that can do it quickly, it's just to sound sophisticated. If there's an algorithm, you can do it very quickly. Suppose here I know, I take 200, I'll subtract 7 from it, I get 193. And I come and tell you, okay, if you put 193, it becomes a number. The output is a number such that the right 2 digits are 0, 0. But if you don't know this mechanism, then you have to do trial and error, right? You put 1, doesn't work, 2, 3, it becomes 10, 4, 11, 5, right? Eventually you're going to get to 193. So if I tell you, okay, among everybody who's listening, the first person who comes up with that number is going to get the prize. Then you're incentivized to have a very fast computer and will have a lot of computing power. And that's exactly the idea behind mining. The miners have to come up with a number with a certain property, as we discussed. There is no fast way of doing it. There's no buzzword algorithm. The only way is trial and error. And whoever does that gets paid some Bitcoin by the network and some commission for the trade. I give you but heads up. So everybody is incentivized to have very fast computers. And all these computers use electricity. And the second problem is that they also create a lot of heat. That's why a lot of big minings are in all the Soviet Union republics, and also I think there's one in Sweden, which is very north, near the North Pole, etc. Now, with this introduction, I put this part for the sake of completion, because some geeky guys might be there and say, I want you to become. See, I told you about this black box that you're sitting in front of your computer and you put a number, this spits out a number. These are kinds of functions. There are functions that if you put a number, it gives out a number very quickly, very quickly. But if I give you the result, it would be very difficult for you to find what I inputted that gave that result, right? Again, buzzword for you to sound sophisticated, that's called the hash function, right? Now, there are a lot of these hash functions, and you can even find it on the web. One of them, I give you an example. One of them is called SHA-256. Go on the web and put SHA-256. If you put any input, it gives you a number. It gives you a string, right? So I said, this is actual. This is not the fake. Then I said, this is a webinar on Bitcoin. When I put it in, it gave me this, right? Now, if I change this a little bit, for example, this second one is exactly the same as the first one, except that the T is lowercase instead of higher. The output is totally different. The output is totally different. Even if I add one more space to the first sentence, the second one will be totally different, not a little bit different. And this is a function that if I give you the output, it's going to take you 100 years to find what's the input. Okay, so now we are ready to see how Satoshi Nakamoto solved this problem. The first one was anonymity. Essentially, he said, you know what? Each person will have a wallet, and this wallet has a hash function. And it's very difficult for the government or anybody else to find who this guy is that has this wallet number. Okay? That's why all the blackmails that have been happening, they say, pay us in Bitcoin. Because Bitcoin goes to a wallet, and it's very difficult, practically impossible to find who is this wallet. Now, the other property was 24/7. Instead of having a central authority, it's a network. Mr. Mani can explain this better. It's a network. All these people are involved in Bitcoin, some of them to a different extent. It is decentralized. There is no central bank or there is no central unit that if first he can control things, and if that thing is not working, you won't be able to send or receive money, right? And okay. Now comes the important question. How do we prevent counterfeiting? One way of preventing counterfeiting is to keep track of all the Bitcoins that are in wallets, right? So if you know which wallet has how much Bitcoin, then nobody can double spend. Because as soon as he spends the money, that wallet becomes smaller and everybody knows that there's not enough Bitcoin in that wallet. To make this operation easy, when you want to do a trade, you have to use all the Bitcoins to your wallet. Suppose I have a wallet with 3 Bitcoins in it, and I want to send one to Mr. Mani. The only way I can do this is that I can send one to Mr. Mani. The other one, I have to send it to another wallet, say, that belongs to me. So essentially, all the wallets that are there, these are the ones that have Bitcoins. And if they want to spend, they have to spend all of it. This way, it prevents, so it becomes 2 wallets, double spending. Now we come to the question of mining. This is less complicated, but you see, so suppose I want to send money to Mr. Mani. Mr. Mani wants to send money to Mrs. Tehran, etc. We all announce all trades on the net. So the net knows that these people want to transfer their Bitcoins to this wallet, to that wallet. They don't know it by name. They know, for example, this wallet that has 3 Bitcoins wants to send 1 Bitcoin to this wallet and 2 Bitcoin to the other wallet. Then the miners take all these trades and put it in a block, right? Like this. And roughly there are 500 blocks in this. There are trades in this block. Now, all these blocks have a header at the top. That at the top has a bunch of information, right? What are essentially a summary of all the trades and all that stuff. What you have to pay attention is the last 2 parts. One is called the nonce, the other one is target. Nonce are the numbers that miners can change, right? Very similar that you were sitting behind your computer and you were inputting different numbers. Target essentially says that whatever the outcome is, how many zeros to the right of it, right? For example, in the case of, let's go back to the example that I gave. If I tell you, for example, I want you to input something that there is 1 0 to the right, you can quickly get there. You put 1, 2, 3, 4, 1, 2, 3, you get 0. If I put 3 of them should be 0, that's going to take you longer. You have to put 1, 2, 3. Finally, you put 1,193, right? And essentially, this target determines the difficulty of the mining such that on average, every 10 minutes,
I'm sorry, Dr. Dehnad, you're breaking up. Maybe you want to use your headphone.
So every 10 minutes, essentially one block is mined, and the people who have found this number by changing the nonce, they get paid some Bitcoin by the network. And also all these trades, for example, if I want to send one Bitcoin to Mr. Mani might get one Bitcoin minus, say, 10 Satoshi. So this Satoshi is like a commission. So they also get all these commissions, right? So everybody is rushing to find this number and mine the block. So essentially, they input this.
I'm sorry, Dr. Dehnad, interrupted. Are you sharing anything?
I guess I'm not.
I think, yeah, suddenly I stopped sharing. So maybe could you?
Okay, sharing is caring. So as they say. Okay. So you see, for example, this miner puts, for example, one here and feeds into it and gets something like this. Then it doesn't have the 2 zeros. Then it put another one, etc. And essentially, the network determines this target such that roughly every 10 minutes, a block is mined. If it is too slow, it takes 15 minutes. It makes it easy. If it is easy, and make it difficult. So during these 10 minutes, Mr. Mani is not sure that he has received my Bitcoin. And I'm not sure that my Bitcoin has gone to him. Okay. So in a decentralized consensus, essentially, every block has a header, miner changes the nonce, the target determines the difficulty, and the goal is to have a block mined every 10 seconds, 10 minutes, okay? Now, the part of Bitcoin that appeals to a lot of people who are worried about debasement of the money is that the total number of Bitcoins that will be created in the world by 2040 is 21 million. Because this additional Bitcoin that's given to the miners, the size of it is going down. Again, using the buzzword is a geometric progression. And it becomes smaller and smaller. And if you add it up together, it will never exceed 21 million. And as we see later on, this appeals to people who are worried about debasement of money and inflation. Okay? Now, as I said, the people who can mine faster, they get all the Bitcoins. That's why you have got, these are all the miners. This is the mining in China. This is all the miners and all the computers that they have, right? See? And in Iran, they don't have as this sophisticated, but it uses a lot of energy. And when a block is mined, it is chained to the previous trades, and we end up with a blockchain. So net, this is the working of the Bitcoin. Now we can switch to some of the properties of Bitcoin. You see, the total Bitcoin is less than 21 million. Now, for any currency or cyber currency to become a medium of exchange, the speed of transaction should go up. In Bitcoin, you cannot process more than, on average, 5 trades a second. Whereas Visa can manage 60,000 trades a second. That's why people use Visa all over the world. When you give your card, there are so many trades coming. And they can manage up to 60,000 trades a second. And for a cryptocurrency like a Bitcoin to really become like money, an economy should be built up on it. And in other words, I should be able to buy coffee. I should be able to buy a car. I should be able to go to a movie using that crypto, right? So you need an economy and a speed of transaction. If that's the case, then all our friends who are economists can say, since the total size of the Bitcoin is less than 21 million, this economy will be deflationary, right? if you know the price of Bitcoin is going to go up, you want to spend. Say, you know what? Why should I spend 2 Bitcoins and buy the Tesla? Because in a year, I can use half a Bitcoin and buy a Tesla. For it to become a store of value, for you to save it for your retirement, then it should not be volatile. You cannot save your money on something that when you retire, the value of it has either doubled or is a third, right? So my view is that unless an economy develops on Bitcoin and Ethereum and so on, they remain an instrument of speculation. It's very good for speculating because speculators need something that is volatile, can go up and down, they can make quick money. And it could also stay as a kind of a funky asset class. People invest in arts, people invest in antiques, people invest in antique watches, right? So Bitcoin is something like that. It is rare, and some people like rare things, right? Now, one important aspect of Bitcoin that appeals to some people is that it is against debasement of money. The value of Bitcoin, since the supply is limited, is expected not to fall. Because whenever you start printing money, the value of that money comes down. And that was actually one of the points of Satoshi Nakamoto, that he was of the opinion that all this money that's being printed by the Federal Reserve and all these other central banks will essentially cause inflation. Most of you are too young to remember this, but during the Weimar Germany, between the First and Second World War, when the First World War finished, you had gold mark and you have note mark, paper mark. They were 1-for-1 when the war finished. But the government started to print money, right? And you have seen these pictures from hyperinflation in Germany. You might say, no, hyperinflation is something of the past. Now we know how to manage the economy. We know macroeconomic much better and all that stuff. I would say, hold your horses. You know what? Venezuela, before they readjusted their currency, the bolivar, 14 million bolivar was one chicken. And this is Zimbabwe. It's 100 million things. And I just got this from my friend in Tehran. I don't know myself, but you see, this is a Nissan, 30 years ago. Which is exactly the value of a four-horn wheelbarrow today, right? And one of the reasons we have inflation in Iran, because the government is printing money, right? By the way, I'm not making any political statement, but this is 2 + 2 is 4, whether you like it or not, okay? And that's why people like to invest in gold, right? Because the total amount of gold in the world is in a 2-story building, right? Whereas the money is being printed in the US, right? I think somebody is unhappy with that, right? Okay. Now, if you invest in cryptocurrency and Bitcoin, one of the major risks that you're bearing is hacking. We just heard that Bitmart 2 or 3 days ago, it was hacked and $150 million was taken away from them. And I just put this just to tell you that all my Mount Cox was in Japan. They lost almost $400 million, right? Bitbank. So these are happening, right? Because everything is in programming and hyperspace, right? And how do we know that all the programs don't have any bugs and so on? Okay. A final comment. Now, Bitcoin and cryptocurrency create a major issue for central banks. because it hampers the monetary policy and control and supply of money. For example, central bank, right? You know this COVID relief, right? That they issued a check, what, $2,000 and then another one, etc. In the case of a Bitcoin, nobody can print Bitcoin. So central bank can't do anything. They cannot change the interest rate and so on. So that's why they are very careful how they handle cryptocurrency. Challenges to the government, right? If you have a Bitcoin on wallet, if you don't declare the Bitcoin, unless you turn it into dollar or something, nobody can come and just tell you that you have so much asset, right? Money laundering. Who is getting money for what purpose, right? Because everybody has that wallet with a long hash number, right? Challenges to the bank. When it's peer-to-peer, how are they going to get their commission, right? If I can send money like an email, I don't need to go to a bank. Now, this part of it is a little bit of a conspiracy theory. And one reason I mentioned this because I've studied cryptography and what happened during the Second World War and Enigma, that was a coding machine of Germany that British stole and finally decoded it. But for a long time, even after the war, they did not admit that they had it. Okay. Now, all the major miners use a lot of energy and they have a big carbon footprint. All the major miners who are in any country, the authorities in those countries know who they are because they use a lot of energy. So if they decide to shut them down, theoretically they can. Whether they have to go through legal channels, etc., is another story. But all the governments know big miners. And actually, recently I read on Bloomberg that Sweden is proposing to stop Bitcoin mining because of its carbon footprint in Europe. The other one is that all these hash functions that I told you, the numbers that are very difficult, that are, give you output, you cannot give input. It's conspiracy theory. How do we know that National Security Agency, etc., they don't have a backdoor? They don't know the secret of it, or they don't have a quantum computer that can do all these computing. The third one that came to my mind during the California fire, see if there's a fire and you have cash, you put it in your pocket and you get on the car and run away. But if you have a Bitcoin, if you go somewhere and there is no internet, etc., how are you going to use that, spend that Bitcoin? And the last part of it is more for portfolio management. This is the last point. Essentially, the idea is that the movement of Bitcoin and the movement of the stock market, they don't move in tandem. They are not correlated. So some people say, you know what, if I put some Bitcoin money on my money in Bitcoin, so when the stock market tanks, hopefully this Bitcoin is hold its value or go up. So essentially, I'm going to have a more diversified portfolio. With this one, as my daughter would say, Daddy, get off the soapbox. So let me get off the soapbox. And I want to thank you one more time for paying attention. And I hope it wasn't too confusing.
No, thank you very much, Dr. Dehnad.
Thank you very much.
Interesting. No, really, we appreciate the time that you spent and put this package together for us. Before I think we open it to question and answer for audience, I have one question for you myself. And I think you referred to all of them basically. However, it is very confusing that many government, particularly US government, unofficially opposed to this without saying it. However, if you see the Federal Reserve, we have some members recently joined the board of Federal Reserve. Some of them are pro, some of them are not making comment. So, which is really, when you say you don't make a comment, basically you are supporting it if we are not coming out supporting. Or some famous bankers like Jamie diamond, he said, well, it is really devastating we should not. And then he started buying it. So many more. What do you take out of this action by the government and private sector, Federal Reserve? What is the take should be for somebody like myself who is not much familiar with the Bitcoin and really doesn't know how to follow the speculation?
Yeah. As far as the government goes, they are correct in such a way. And actually, if you remember, Facebook proposed a cryptocurrency called Libra, right?
Yeah.
And the government shut it down for the following reason. Almost a lot of people are on Facebook, right? If Libra is a cryptocurrency of Facebook that has such a wide usage, then an economy will be built upon Libra very quickly. That Indian guy, I bet you in that village, there is at least one guy who has Facebook. A lot in the third world country, a lot of people have a mobile, right? In villages. So essentially that Libra will become like dollar and people can send it directly. And US government shut it down. Eventually they realized that cyber money will come, but they're trying to find a way that somehow not to lose control over it. That's one thing. Now, as far as you goes, you know what? There is a saying on Wall Street, either you eat well or you sleep well. So you have to decide whether you want to eat well or you want to sleep well. If you are a young guy, I would dabble a little bit in crypto. But if you are an older person, I think the risk is just too much. That's my personal view, right? And in your case, I think I should talk to your wife, because in the Iranian household, the woman has the last word. And if she said yes, then come to me and I'll have some.
Okay, thank you. Thank you very much.
But,
thank you very much.
But in general, for example, there's a hedge fund manager, Paul Tudor Jones. He has put some money in crypto, and I bet you he really doesn't know it. But his argument is that something which is worth $20 trillion, and they say you have to be in it to win it. So I put a little bit of my money there, right? So my advice to everybody is that be brutally honest with yourself and see what's your risk appetite, right? If your investment drops by 50%, can you sleep? If you cannot, then crypto is not for you. There are so many other assets you can put your money in.
Thank you very much. Okay.
Well, by the way, that's my personal view, by the way.
Yes, I understand.
And I've been wrong so many times. So.
No, I understand. Thank you for your answer. But let me see if I can...
I think she's calling you, huh?
Up to... no, she's not calling, no. No. I just want to open it up to see if anybody has a question.
Don't ask difficult questions. It's 7:30. Yeah.
Yes. Anybody has any question? Please raise your hand.
Oh.
Miss Faye, if you can unmute yourself.
Yeah, I just
unmute myself. Oh.
No, that's for the audience, Dr. Dehnad.
Oh, okay.
Yes.
I never traded stocks, and just one day I decided to buy some stocks and just leave it there. And I didn't really put that much money so I can sleep. And so with the cryptocurrency, can I do the same thing? Just put some little money and not worry, or I have to really keep an eye on it?
I'll answer that question. Hi,
Could you repeat it? You broke.
No.
You can hear me?
Or somebody repeats it, please.
Yeah, I think Ms. Faye was saying she made some investment and forget about it, basically, as what you suggested, and she sleep comfortably. But can I do the same thing? Again, I just want to emphasize to those of you who join us late, that we made a statement. The purpose of this talk is education of the negotiational and is not a recommendation to invest or not invest. And this is both American Iran American Society as well as Dr. Dehnad's position. So please do not take the answer that you're going to invest tomorrow morning.
Yeah, Mr. Saeed, I'm not asking for recommendation. I'm asking for the process of it. Like something that you can just put the money and not keep an eye on it, or it's like a day trading. You have to constantly be on top of it. That was my question.
Thank you.
It depends what's your risk appetite and what's your investment horizon. If your investment horizon is a day or a week or a month, you should be on the top of it. But if you're a long-term investor, like what you did with the stock, you should buy and sit on it because you have they call it, you have a directional view. If you have a directional view, it says, I think it's going to go up. It might go down in the interim, but eventually it's going to go up. Very similar to what value investors or Warren Buffett does, right? But in his case, he does his homework because he knows the balance sheets, income statement of these companies, etc. In the case of a Bitcoin, essentially at this time, you are relying on the market and people's sentiment, right? The whole thing is that if major financial institutions start buying Bitcoin, its price will go up because the supply is limited. But the major financial institutions like pension funds, insurance companies, etc., they haven't started to buy Bitcoin or other cryptocurrency. Are they looking at it? The answer is yes. Have they done it? No. So my answer to you is that it's a bet. If your bet is that these guys are going to get into it, I think the upside is that buy a little bit.
Right.
Otherwise, enjoy your long-term investment that has quadrupled.
And satisfy your curiosity.
Yes.
Oh, okay.
Okay. Any other question?
Hi, Mr.
Go ahead.
Okay.
Miss Jafari, I know she had her hand up. If you can unmute yourself.
Hi, thank you very much, Doctor. My question is, if we wanted to try it out, is there an exchange or a place to open an account that you think is easy and simple and clear to use? I heard about Coinbase. I've heard about Sophie. Is there anything that you would suggest we take a look at?
By the way, as Master Mani said, I don't suggest, but I just mentioned things. You see, Coinbase is that you buy your coin and it is sitting there, right? And like Bitmart, if it gets hacked, then you might lose it, right? Essentially, it's kind of it keeps your Bitcoin. Other approaches is that to invest in, say, ETFs like GBTC, right? Essentially, you are buying some shares of that company that has invested in Bitcoin. You have these choices. The good thing about both of them is that they have liquidity, right?
Thank you.
And the good thing about, for example, ETFs is that, see, right now, Bitcoin today was $50,000. Rather than buying one Bitcoin or one or two Satoshi, GBTC, you can buy 2 or 3 shares, say $100, $200, if you want to stay curious to see what it does. And if it goes to zero, so be it. Not all our bets are winners.
Thank you. Okay, any other questions?
Did I answer your question, or it was more, I confused you more?
No, it was really helpful. Thank you.
Miss Nahi Jafari, if you can unmute yourself.
Yes. Hi, everyone. Hi, Dr. Dehnad. Thank you so much for your presentation. It was really interesting. So I have a quick question because you mentioned about, kind of like eliminating banks in in this process. But how about, and commission they usually get, but how about exchanges? Because right now to trade any cryptocurrency, we work with exchanges. Like in United States, we work with Coinbase, and they charge us for commissions.
Oh, you're right, but we are talking about the future. For example, right now, there is something called smart contracts that essentially they are decentralized exchanges. The commission that they charge is very little, and essentially is peer-to-peer. So essentially, the commission will not go out 100%, but it will come down quite a bit. That's what I'm saying. For example, right now, if you want to go and send money from US to London, right? Don't use Zelle. Suppose the person doesn't have a bank account. You know what? For $1,000, it's going to cost you around $63. 630 basis points. It's a lot. But what happens is that slowly the commission will become almost minimal. But you are right. Commission will never go down. But as market becomes more liquid and there are more players in it, these commissions will go down because there is not much work to be done. Essentially, these are just bits going from one place to the other, bits.
Thank you.
Yeah.
I got it. So I didn't kind of like thought about changing money overseas, out of country. So right now I see what you mean. Thank you.
Exactly. Okay. And let me give you another example. Right now, take $500, go to a bank that you don't have an account there. And say, you know what, I want to deposit this to Mr. X's account. They won't let you. Say, no. You have to write a check. We should know who you are. Just try. I tried this. If you get cash and go down, want to give it to someone, put it in somebody's account, they say, do you have an account here? You say, no. You say, no, we cannot take cash. You have to write us a check. It's KYC. They know what money goes where and all that stuff. This anonymity that a lot of people are allergic to.
We have, thank you. I don't know if it's Mr. or Mrs. Marge Isapur. If you could unmute yourself.
Hi.
Hi.
First of all, thank you, Dr. Dehnad, for a very informative lecture. Thoroughly enjoyed it. But I just want to go back to the topic of your talk is it a fad or a future? So do you really think that it will become the future?
I think a version of it will become a future. You are just too young to remember. But at the beginning of the internet, you have Alta Vista. You have Google. You have so many things, right? And finally, one or two of them emerged, right? The same thing here. Is it going to be Bitcoin? Is it going to be Ethereum? Is it going to be Cardano? I don't know. But a version of cryptocurrency will emerge. Or even some governments might say, you know what, we have cryptocurrencies. You can send it directly without going through any banks. So the answer to your question is that, do I think? I said the probability is more than 80% because of internet and technology. Which one? I don't know. It might not be even any one of the existing.
Very good.
Very similar to what happened at the beginning of internet. We had no idea that Google come along. As, again, in the buzzword of software development, if you come up with a killer app, an application that a lot of people will use it, then it's going to take off.
Thank you. I had a follow-up actually question, maybe not quite related, but I think you mentioned something about, right now buying and selling Bitcoin, it's not like trading stocks or ETF. So let's say I bought, and I know we were having a conversation a while back with somebody who suggested to me when it was $2,000, why don't you buy some Bitcoin, and I said, I think it's still too not mature enough for me to even consider it. So now it's at 50,000. So that person that bought it for 2,000, let's say he bought one Bitcoin, and now if he wants to sell it for 50,000, is there a tax consequence? I mean, it's a currency exchange. It's not like buying and selling stocks. How does that work these days?
At this time, the IRS asks you that whether you own any Bitcoins and if you have any sold or bought any one. It's just honor system at this time. And if you don't reveal it, that's it.
Okay, thank you.
That's why I think they ask you to have Bitcoin. So.
Okay, thank you. Next question.
Mr. Saram, if you could unmute yourself.
Yeah, thank you. I'd like to bring up a different issue you did not discuss, sir. Ethics, criminality. I was prompted by a chat early, maybe you didn't see someone put a chat, that, to me, I speak for me, I'm professional and ethical, not that people who do Bitcoins are not. Why, if I had $1 million tonight, would want to invest in a system of corrupt criminals, whether it's the Sepah in Iran or others, whereas you could invest, as you said, many other ways. So I appreciate, I'm not saying right or wrong, but you didn't touch on the ethical aspects of Bitcoin that we don't know who, what, which is involved, which government, who, what. And at the end, as you said, not too many people are ethical to pay their tax if IRS asks them. So, I'm having problems, and I'm an 80-year-old old-timer, I guess, like you. I'm having problems. You didn't touch on the ethical aspects of Bitcoin. You are not going to advise do it or not do it, but I expected you to do it. So could you touch on this? Thank you.
Sure. Mr. Saram, it's a very good point that you have. But in general, money is amoral, right? And it is. It's very similar to a knife. Some people use it to kill people and some people use it for surgery. So, as I said, money is amoral. You have a very good question. And I can give you my view of it, right? That almost 100% coincides with yours. And I'm not as moral as you are, but I'm quite moral. And I pay my taxes. But as I said, money is amoral. That's like so many other things. A car is amoral. Either can kill people or can get somewhere quick. You know what I'm saying? That's the same thing. Dynamite. You can make roads and you can make tunnels or you can kill people. Very difficult question. Probably Mr. Mani can set up another Zoom meeting to discuss this moral question.
Sure.
Of course, I'll be only a listener.
Thank you.
Mr. Saram, Dr. Saram, did I answer your question?
Well, yes and no.
I evaded it nicely, right?
No. I will call you later and we will talk. I believe most of the people in the world are ethical, professional. They don't cheat. But, again, I'm making a point. If I can invest in buying and selling homes, maybe there are a couple of criminals. But Bitcoin, which I understand to be in the hands of big criminals, Sepah Pasaran is one of them. But why do I want my son to get involved in a transaction that more criminals are involved? You're right. Money is immoral. However,
amoral. I'm not immoral. Amoral.
Well, I understand that.
Amoral, not immoral. Amoral. Doesn't have any morality. To second what you said, that dollar is in the hand of Sepah Pasaran and is in the hands of Salvation Army, right?
Well, then I will conclude by saying my ethics will never, ever allow me, even if I get Warren Buffett's money, to invest in Bitcoin. But that's me. Good for the people who get involved in Bitcoins and they don't pay their taxes and they can sleep at night. It's a statement of morality.
I agree with you 100%.
Thank you.
Okay. There is Mr. Dr. Dehnad, there is a question. What is your opinion about investing in a crypto mining companies rather than the crypto itself?
If you have a lot of money, it's an interesting thing. But you should first find cheap electricity. Otherwise, it's not cost effective. And it is a technology intensive, and you need particular chips. Just look at the three.
No, I'm sorry. The question was
one small mining things is $1 million. A small one.
No. I'm sorry. The question was not somebody create his own. Somebody invest in a crypto mining companies, not create or own. Like I go invest in a crypto. The company is making the crypto. Or is a good idea. Again, this is not a recommendation yet.
What you should?
In a mining company, mining.
Well, mining company, exactly. A company wants to open. You have to drill down. See, what is the technology? How are they going to use it? What's the cost of their electricity? You know, in which jurisdiction they are. On average, what has been their performance? How many tons what's their hash power, right? So it needs a lot of homework, right? And based on that, you have to determine what would be the return on your asset. We're going to Mr. Saram. Mr. Saram says, if I invest in Apple, I get the dividend. It's not much, but it still pays dividend. And I can also, last year, you had 20% return. So my answer to you is that you have to do your homework. I mean, I don't know how big this is. Are they part of a syndicate? Where are they located? Who are the operators? Do you know what I'm saying? That's it.
Yes, thank you. Anyone has any more questions?
Mr. Farahman, if you can unmute yourself.
Dr. Rezvani, go ahead.
Good evening, and thank you very much for your interesting presentation. But I have a question regarding, as you know, we dropped the gold standard because the supply of gold more or less is fixed, and therefore there is no possibility of monetary policy by the central bank. So if the Bitcoin or cryptocurrency has a limited supply which is fixed and the price is just moving based on demand, well, then that again will become like lack of monetary policy and the control of the economy go out of the control of the central bank.
You're right. Essentially, what happens is that Nixon exited the gold, standard because they wanted to print money, right? And essentially, the people were giving them dollars as, say, giving us the gold. And the Fort Knox, all the golds, etc., were going out. Say, no, we're going to discontinue it. Bitcoin, if an economy is built upon it, we'll have the same problem. You're right. And see, and that's why the government is against it, against an economy to be built upon Bitcoin, because it's deflationary. And government cannot issue Bitcoin. Just it's a network. They can't do anything.
So it's exactly. So it's basically it become out of control in a sense that if an economy is growing, you need more medium of exchange, as you mentioned. So, but if it's fixed, the supply of it, then in a sense you don't have money, and there is no possibility of using it as a medium of exchange.
You are correct. 99%. You are right. When the supply of money is limited, then you have deflation. Prices drop. You know what? I have $1 and I have 1 pen, right? Now, if this $1 doesn't change. And I can make 2 pence, then they should become 50 cents. If I make 4 pence, they should become 25 cents. If that dollar changes, you are right. The size should, if the prices are not fall, the money supply should grow with the growth of the economy. Otherwise, we're going to have deflation. And the problem with deflation is that if you know the car is going to cost half of what's costing today, you say, what's the rush for me to buy? I'll wait till next year and I'll buy.
I thank you very much. I understand that it causes deflation, but the purpose it creates deflation is the fact that you have a limited supply of it. And that as economy grow, you have less money, so prices start to fall. So therefore, we need a monetary policy and the control of the money supply, which means Bitcoin basically cannot become the medium of exchange. That's all I want to say.
I agree with you from two. One major part of it is what you are mentioned. The other one is the speed of transaction. Yeah. If you know what I'm saying, you and I sending us Bitcoin, we can wait for 10 minutes. But I cannot go and want to buy meat and I have to wait 10 minutes or 20 minutes, etc. So I think we agree.
Thank you, Dr. Rezvani. Thank you, Dr. Dehnad. Any other question?
Hi, how are you? Thank you for your information. I have just one point to mention to Mr. Mehdi Saram. To be honest, you are too young to be 80 years old, and I don't know what is the secret. Anyway, you don't need to be criminal to invest on cryptocurrency. Bitcoin didn't come with crime, and crime didn't come with Bitcoin. Crime was from old days, and it is just, it's not going to go away with crime with Bitcoin. Therefore, come on. I'm not criminal, but I invest on cryptocurrency, but at the same time, I give you, Mr. Mehdi, credit to name Pasdaran. There are wars that can happen in the modern history, and they use that, of course, as a cryptocurrency. They use for different transactions, but at the same time, last time I checked, I am not a criminal. Thank you very much.
I just had the same idea, hedge fund. It's all offshore and there's a lot of crooked people there, so not that much different.
Okay. Next question. Thank you for your comment. And what's the next? Anybody has any more question? We are coming to the end of our talk in 5 minutes, so I want to see any other question.
Mr. Mani,
go ahead, please.
Do you hear me?
Yes, Mr.
Right.
Mr. Kosrow, please go ahead.
Yeah, good evening. Dr. Dehnad, thank you for the informative lecture. I was wondering, as we say in stocks, they say the past performance does not guarantee future. Considering this past history of cryptocurrency, is that the same concept applies to it? And do you think Bitcoin is going to go to 100,000 in the next 3 months?
If I had a strong view on it, if my wife would let me, I would have invested in it. But you are correct. You are correct in that sense. The only problem is that in the case of the stock, roughly we know the business, we can look at their balance sheet, income statement, competition, all that stuff, right? Right. Acid test, current ratio, and all that stuff. The problem with the Bitcoin is that this time is supply and demand. So if you think major investors like finance companies, like insurance companies, and like pension funds are going to go into Bitcoin, it's going to go up. So to answer to your question is that I really don't know. Will I be surprised? No. Will I be surprised?
Right.
No.
Thank you.
But also, I have a paper, I can send it to you, in which we argue that both gold can go to zero or Bitcoin can go to zero. And we have given scenarios. You know what I'm saying? We have given scenarios. You know what? Suppose, again, this is conspiracy theory. Suppose US and China and Russia say, you know what? Let's shut down these major mines. They can do it. They know all the major mines. The problem is that some of them might be their friends, but that's another story.
Yes.
You see, you heard in Iran, they found a big miner that was using industrial electricity to mining, but they didn't dare to show the name of the company because the guy was well connected. You follow what I'm saying? So
that's
they know. Yeah. But let's stay out of politics. So the answer to your question is that I don't know. I won't be surprised.
Thank you very much. Thank you.
Okay. Any other question? Okay, it looks like we run out of questions, but I just want to again thank you, Dr. Dehnad, for joining us, and thank you for all of you who made this, attending this meeting and asking a very good question and comments. Really appreciate it. We hope we have more program for all of you in the near future, and we wish you happy holidays. And for those of you who are nearby, we are having a Yalda party next week. I hope you can join us. With that, have a good evening.
Thank you very much. Thank you.
Thank you.
Bye.